Stop right now. If your NZ Super suddenly looks lower, do not assume the government has cut your pension, because for many people, the real problem may be a tax code mistake hiding in plain sight. And this matters a lot more than people think, because when your NZ Super payment comes in lower than expected, the first reaction is usually panic. People think something has been taken away. They think a rule changed overnight. They think there has been a secret cut, a processing mistake, or some kind of unfair decision. But in many cases, the issue is not a government cut at all. The issue is tax. More specifically, the tax code attached to your NZ Super. In today's video, I'm going to explain what may really be happening, why your payment can appear to go down even when the official NZ Super rates have not been cut, which retirees are most at risk, and the simple steps you should take right away if your deposit suddenly looks smaller. If you receive NZ Super, if you still work part-time, if you have another income source, or if you have ever changed jobs, stopped working, or updated your tax details, then this is a video you need to watch carefully. Because this is one of those problems that looks small on paper but can make a real difference to your weekly and fortnightly budget. And the worst part is this. Many people do not realize there is a problem until after their payment has already dropped. NZ Super is taxable income. That is one of the most important facts to understand right from the beginning. NZ Super is not paid to you as untaxed money. Tax is deducted before you receive the payment, which means what lands in your account is your net amount, not the full gross amount. So when people say, "My NZ Super went down," what they are often noticing is not a change in the official base rate. They are noticing a change in what they receive after tax. And that difference matters, because if the wrong tax code is being used, your net payment can look noticeably smaller, even if the official NZ Super entitlement itself has not been cut. That is where many people get confused. They look at the money in the bank, they compare it to what they got before, and they assume the pension itself was reduced. But that is not always true. According to official work and income guidance, how much you get depends not only on your situation, but also on the tax code you use. And if you or your partner get other income as well as NZ Super, it may change the tax code you use. That means you could get less in your NZ Super payments depending on the code that applies to you. Work and income. Now let's slow this down and make it easy. Think of NZ Super in two layers. The first layer is what you are entitled to before tax. The second layer is what actually reaches your bank account after tax is taken out. When your tax code changes, the first layer may stay the same, but the second layer can drop. So if you suddenly notice less money arriving, the right question is not always, did the government cut NZ Super? Sometimes the better question is, am I still on the correct tax code? And for a lot of retirees, that is the question that changes everything. Now, who is most likely to run into this problem? Usually it happens when someone's income situation changes. Maybe you started a small job after retirement. Maybe you stopped working and never updated your details. Maybe you receive another source of income. Maybe your tax setup changed because of how your income is classified. Or maybe you had a tailored tax code and did not renew it on time. That last one is especially important. Work and income says that if you have a tailored tax code, you need to renew it with Inland Revenue at the end of each financial year. If you do not renew it and you do not change it to a standard tax code before the end of the financial year, your tax rate will default to 45% on April 1st. Work and income. Let that sink in for a second. 45%. That is not a small adjustment. That is the kind of change that can make a retiree look at their payment and think something has gone seriously wrong. And from their point of view, it has. Because even if the official pension rate has not been reduced, the money they actually receive can take a heavy hit if that tax setting is wrong. This is why tax code issues are not a tiny paperwork matter. They are a real income issue. They affect budgeting. They affect grocery planning. They affect power bills. They affect medication costs. They affect confidence. And for many older people living on a fixed income, even a moderate drop can create stress very quickly. Now, another important point. Officially, NZ Super rates increase every year on April 1st to adjust to changes in the average wage. That means the overall system is not designed around random hidden cuts. If there is an increase or any official change to payment rates, Work and Income says that information will be communicated on its website. Work and Income. So when someone claims everyone's NZ super has been reduced, that should immediately raise a red flag. Because broad cuts to the base rate are not something that just quietly happens in the background without official communication. What is far more likely is one of these three things. First, the person's tax code changed. Second, they have another income source affecting their tax treatment. Third, they are comparing gross and net amounts without realizing the difference. That third point catches many people. Some retirees hear about a payment figure online and assume that is what should land in their bank account. But they may be looking at a gross amount, while their own bank deposit is the after-tax amount. Or they may be comparing their deposit to someone else's, even though that other person has a different living situation, different income, or a different tax code. And once people start comparing the wrong figures, panic spreads fast. One person says, "I'm getting less." Someone else says, "Maybe they changed the rules." Another person says, "WINZ must have made a mistake." And before you know it, a routine tax issue turns into a full-blown rumor about pension cuts. That is exactly why videos like this matter. Because older viewers do not need noise. They need clarity. They need to know what is official, what is likely, and what they should actually do next. So let's talk about the tax codes themselves in a simple way. Work and Income's NZ super rate tables show different after-tax amounts depending on the code used. For example, there are amounts shown under M, S, SH, ST, and SA. And the reason those numbers differ is simple. Different tax codes mean different tax rates are being applied, which changes the net amount you receive. Work and Income. That means two people with the same broad NZ super category can still see different after-tax payments if their tax codes are different. And that is where many people get tricked by appearances. They think the payment system is inconsistent. But often the real explanation is that the tax treatment is different. Now here's the practical warning retirees need to hear, FTD. If you stop working, tell Work and Income straight away if your tax code needs to change. That is not my opinion. That is official guidance. Work and Income says to tell them straight away if you need to change your tax code, for example, if you stop working, so they can pay you the right amount of NZ super. Work and Income. That sentence is incredibly important because a lot of people think stopping work automatically fixes everything. It doesn't always. If the records are not updated properly, you may continue under a tax setup that no longer matches your situation. And if the setup does not match your situation, the payment can be wrong. So if you have recently retired, reduced your hours, picked up casual work, or changed the order of your income sources, that is not something to ignore. It is something to check right away. Now let's make this very practical. If your NZ super seems lower than expected, what should you do first? Step 1. Do not panic and do not assume it is an official cut. Step 2. Check whether the payment date is normal and whether any yearly changes have just happened around April 1st. Step 3. Check your tax code. Step 4. Review whether you have had any recent income changes. Step 5. Look at any letters, notices, or online account updates from Work and Income or Inland Revenue. And Step 6. If something looks wrong, act quickly rather than waiting month after month. Because the longer a tax issue sits there, the more stress it can create. And in some situations, not acting can create problems in both directions. If too much tax is being taken, your cash flow suffers now. If not enough tax is being taken, you could face a tax bill later. That is another important truth many people miss. A tax code issue is not only about losing money in the short term. Sometimes it is also about preventing a nasty surprise later. So even people who think, well, maybe I'll just leave it, should be careful. Leaving it is often the wrong move. Now, I also want to speak to family members for a moment. If you help your mom, dad, aunt, uncle, or grandparent with letters and payments, this is one of those things worth checking with them calmly. Not in a way that creates fear, just in a practical way. Ask them if their payment has looked different recently. Ask if they still work part-time. Ask if they ever had a tailored tax code. Ask if they received a letter they did not fully understand. Ask if they changed jobs, stopped work, or started another income source. Because sometimes the person affected is not ignoring the issue. Sometimes they simply do not realize what the issue is. And that is why a second pair of eyes can help. Now let's address one of the biggest myths directly. No official government cut means nothing can be wrong. That is false. Something can absolutely be wrong from the retiree's point of view, even if there has been no official reduction in NZ super rates. Why? Because what matters in daily life is not only the official rate. What matters is what arrives in the bank and what that money can cover. So if someone's payment is lower because the wrong code is being used, their problem is real. It is just not the same as a policy cut. And that distinction matters because it changes the solution. If it were a policy cut, you would be waiting for a government announcement or legislative change. But if it is a tax code issue, then the solution may be much more immediate. It may come from checking the code, updating the details, and making sure your income situation is correctly recorded. That is why I want viewers to shift their mindset from panic to checking, from rumor to evidence, from assumption to action. Let me give you a simple example. Imagine a retiree who receives NZ Super and also does a bit of part-time work. Everything seems fine for a while. Then later they notice the deposit is smaller than expected. They hear someone online say pensions are being cut. They worry. They delay checking. Weeks pass. Bills pile up. Stress grows. But the real issue might not be a pension cut at all. The real issue might be that their income mix means a different tax code applies, or a previous code was never updated, or a tailored code expired and no one renewed it. Same lower payment, very different cause, very different solution. And this is exactly why accurate information matters so much for older audiences. Because when you are living on a budget, confusion is expensive. Now here's the bottom line every viewer should remember. NZ Super does not randomly go down for no reason. If your payment looks lower, there is usually a reason. And one of the biggest reasons is tax. That includes the code you are on, whether your income situation has changed, whether you are comparing net and gross correctly, and whether a tailored tax code has been renewed properly before the end of the financial year. If you remember only one warning from this video, make it this. Do not ignore your tax code. It is not a small detail. It can directly affect the money you live on. And if you have a tailored tax code, do not sleepwalk past the end of the financial year because Work and Income says that if you do not renew or change it before then, the tax rate will default to 45% on April 1st. Work and Income. That one rule alone can explain a lot of sudden payment shock. So if your NZ Super looks lower, take a breath, stay calm, and check the right things in the right order. Check your code, check your letters, check your income changes. Check whether you stopped working and forgot to update details. Check whether your payment changed after April 1st. And if you are not sure, contact the right official source and get clarity. Because peace of mind starts with accurate information, and accurate information starts with looking at the real cause, not the loudest rumor. If this video helped you understand why your NZ Super might look lower, please like this video, subscribe to the channel, and leave a comment below. And tell me this in the comments. Have you ever checked your NZ Super tax code? Or is this the first time you are hearing that it could affect your payment so much? Your comments help this channel create clearer videos for seniors across New Zealand. And if you know someone who receives NZ Super and may be confused about a lower payment, please share this video with them. It could save them a lot of worry and help them ask the right questions sooner. Thank you so much for watching. And remember, a lower NZ Super payment does not automatically mean the government cut your pension. Sometimes the real problem is much more hidden than that. Sometimes it is not the policy. Sometimes it is the tax code. And once you know that, you know exactly where to start looking.